Do you trust me? Do you trust me? Don't judge me. And I can't love you. You sorry. Too passionate. You sorry. I lost my way. You made me know my day. Tell you what I'm right now. When I fall short, I'm waiting on you to cry. We all got enough to buy, but you do complicated to high now. Can I open a business safe? I'm not gonna say, I'm not gonna fake, I'm not gonna fake, but you know how I take my time. Ain't no saving face this time. I hope I'm not too late to set my demons straight. Now I get you wait. I was the you take. I hope you see the God. Okay, I hope you can see if it's so they got me.
Good morning.
You know these vibes now. Where everybody do? Where everybody do? Where's everyone? Where is everyone? This glad I only did this. I get emotional about life. Good morning, Techno. Good morning, Beef. Good morning, Golden. Good morning, Ichachi. Ichachi. Isika. Good morning. Hope I'm not too late to send my demons straight. Now I take you away. How much can you say? I hope you see the God in me. I hope you can see if it's something God from me. Baby, thanks you. That's a long yeah. I beg, where are the January batch? The newcomers, the freshers. Where are they? Where are they? Okay. The newly initiated. All right, guys, I'm waiting for you guys. I'm waiting for you guys. We're only 24 here. Are you kidding me? Out of 300 and something. Well, probably some of you are in school. Some of you are maybe at NYC, wherever. Some of you are at your workplaces. Now let's start my sessions around 50 to 40 participants. So yes, fam, we made it. So how has this trading week been so far? How has this trading week? Before wait for the rest to join. How has this week been so far? Did you go against your rule? Did you go against your rule? Did you take unnecessary losses? The staring in like souvenir. Okay. Well, I took I think on Monday, today is what? Wednesday. On Monday, I had like a winning streak. Yeah, I think I won like 7 trades and maybe like 1 or 2 losses. But yesterday, I took 3 losses straight, man. Good. I took 3 losses to start with. Although the last trade I took last night, it recovered all the losses, but it's part of the thing. I'm not scared of losses, so every time So if you are still scared of losses, you are still scared of taking losses, please just know it's a normal process. It's normal stuff. You can never avoid loss in this life. It's just like how you can't avoid breathing air. Loss is like the air you breathe. You can't. I still have FOMO, but I'm working on it. Yeah, we treated that last time, psychology. Yeah, we treated that. Why is everyone not here? Let me notify everyone. I see that you are. I'm foolishly patient, foolishly patient. My fragrance of your lips. Don't wanna let you out my head. Just like the day that I met you, the day after forever. Night after forever, cold outside. Yeah, the pre-record videos will always help you. Like that's why I record the sessions. It's going to help you really, really well because there are some people that they just watched the video on advanced market structure and liquidity and they're already making money. You get. So if you are taking losses, just know that it's normal and please always apply risk management on your trades. Whenever I have a capital, maybe $1,000 or 500, I make sure I divide it into like maybe 10 places or 5 places. You get. So I know that I can't lose 5 trades in a row. So if I lose 3 or 4 in a row, the last trade will recover all of my losses. So guys, please apply risk management. Where is everyone? All right, I've notified everyone. How many are we now? 29. This is poor. This is poor. This is poor. Please, if you are from this month batch, January, please just signify. So I will know how many of you are here. Please signify. So I don't waste this. Okay, 35. Signify, please. January batch. Okay, January. Present. All right, 38, 39. Okay. 50 and we start. Okay, good, 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 good. All right. 39. Where are the others? Where are the others? 43. January. Okay. Okay, good. I think we have a lot of Januaries now. So let's begin officially. Let's begin officially. My name is Chooks. I'm your mentor, and welcome to the mentorship program. You guys are gonna have fun. Trust me, trust me. This new batch, you are going to, enjoy this whole session and everything, right? You're welcome. Welcome on board. Welcome on board. Now let's get down to business. Let's get down to business. Market structure. The very first thing, the very most important thing you guys need to know about trading is market structure. Market structure. Um, I this was the first thing I taught in the December batch, and a lot of people are already doing crazy figures. You get some are still crawling, but they'll get there. They'll walk. Like I said, Pikin go walk. Pikin go crawl before he waka. You get Pikin gas crawl before he waka. So this is the process. Okay, this is the process. So you just need to trust the process. Okay, we are not in a haste to make money. If you come into the market with that kind of mentality, trust me, your trading will be fucked up. Okay, it will be messed up. So please just come with the mindset that okay, you want to learn. You want to learn a skill that will give you income, not coming to learn to make money. No, you want to learn a skill. All right. And the very first topic we are treating is market structure. What's market structure? Yeah, what's market structure to start with? Who can tell me what market structure is? Who can tell me what market structure is? Please just type in the chat box what market structure is. Let me see what you guys got. The direction of the market. The direction of the market. Okay. Movement of the market pattern. Okay. Direction at which movement pattern. Yeah. So great. I think you guys have an idea what market structure is all about. Those in December batch, please, you can still, pay attention. Okay, because this is more like a lifetime mentorship. So even the January batch will still be in the February batch. You get like that. It goes on and goes on like that. You get breathing pattern of the market. Okay. Still not bad. It's good. It's good. So guys, please just take it seriously. Even if you know about market structure, just still take it seriously. Okay. So we have types of market structure. We have the basic market structure and we have the advanced market structure. Okay, so we are going to look at the basic market structure before we advanced into the advanced market structure. Yeah, you see what I did there. Before we advance into advanced market structure, you get. So let's look at basic market structure. Now, there are three types of movements generally in the market structure. We have what we call the uptrend. We have what we call the uptrend. We have what we call the downtrend. Downtrend. And we have what we call the ranging market. The ranging market. Okay, good. So we know that market moves in these three types of directions. First, we have the uptrend market. What does it mean? Uptrend simply means up. Market is trending to the upside, right? So we have something like this. We have a movement like this. We have a movement like this, right? This is an uptrend. Okay. If you are new and you don't know what this means, this is what we call the higher high, higher low, higher high, higher low, higher high, higher low. This is how market moves. Okay. Hey, wait. Jesus. So if people can't see my screen. Jesus Christ. What? Please, can you see it now? I fear. Oh yeah, please. Let's start it again. Let's start it again. 1 minute. All right, it's clear now. All right, let's start again. So we know that market moves in three phases. We have the uptrend, we have the downtrend, and we have the ranging market. Now, what market is doing here right now is called the uptrend. So the uptrend simply means market is moving up to the upside. It's moving to the upside very clearly. Okay. Now, this uptrend simply means that there are lots of buyers in this market. There are lots of buyers in this market. Okay. So what the market is doing is people are buying a particular instrument, and the more you buy it, the more it increases in value, it increases in price. Okay. The more a lot of people are demanding for it, the more the price increases. You feel me? So this is what is happening basically in an uptrend market. Same thing as downtrend market. We have this. Market is going lower, lower, right? So what it's simply doing is creating a lower low, a lower high, a lower low, a lower high. So now market is not breaking this high, this previous highs, because it's on a downtrend. It's selling. So people are selling this particular instrument. You get, and the more people keep selling it, the more it keeps going down in price because no one wants to hold on to it. So they are selling it. No one is buying it to keep. They are selling it away. So it decreases in value, in price. All right. So when we see this in the market, we know that, okay, this is the direction of the market. That's why it's called the market structure. This is the structure of the market. So we want to obey the structure of the market. We don't want to go against it. If it's buying, we don't want to be selling. Because if we are selling this market from here, right? Let's say we are selling from here. It's going to stop us out because its direction is an uptrend. So if we are selling from here, market will just do this. So that sell is more like a retracement.
then to keep buying. If we sell again, it will buy again. We sell. So you can see it's creating new highs every day. This is dollar at this $80. This is dollar at $100. This is dollar at $200. Sorry, 200. What am I saying? This is dollar at 500. You get like that, like that. The dollar got to 1,000 per dollar. Are you seeing? It's increasing in value. Okay. So you want to follow the trend. Now imagine you are buying an instrument or a stock or an asset here at this area. You are buying here. Yeah, and you are selling here. That is profit. That is trading for you. Now imagine you are selling here. Let's shift this a bit. Imagine you are selling here. You are selling here, and market got here. You've made profit. Okay. So now you want to always follow the trend in the market. I know you guys have heard follow the trend, and then when you come to the chart, you see the daily time frame they do. Daily time frame they go Magodo. The 4 hours time frame they go Island. 1 hour time frame they go this thing Lekki. 15 minutes time frame they go where Dubai. Sure, you get my point. Now they say follow the trend though. Now you come to the charts, you don't know which trend you want to follow. Whether you should follow Lekki, abi you should follow Magudu, abi you should follow Surulere, abi you should follow Yantaja. You don't know which one you want to follow. That is where top-down analysis comes in, family. That is where top-down analysis comes in. You get, because now this trend in the market will confuse you if you don't know the overall trend, like the overall the oga of them all, right? You need to know where price is coming from and where price is going to. That is called the trend. That's called the market structure. You feel me? So now we have what we also call a ranging market. A ranging market. Now, this simply means the market isn't really moving. It's moving, but it's just ranging within a particular price. You get, it's just ranging within $200 and $100. Let's use $100. So now down here is $100. Please, can you guys hear me? Can you guys see my screen? I want to be sure. Okay, good. Now, so we have $200, we have $100. So price is doing what's ranging within $100, $120, $150, $200, comes back down to $150, $100, $200, like that. So this is just simply ranging. It does not have any movement. So nobody, the buyers are not overshadowing this, the sellers, and the sellers are not overshadowing the buyers. So they are of equal ratio. You get, they're of equal ratio. Not until we see something like this, a breakout to the upside. Then we know that, okay, buyers are now more active in this market. There are more buyers now in this market. So what we're going to be seeing, we'll start seeing this price giving you this trend. You feel me? So same thing as the opposite, same thing as the sell. Same thing as the sell. When price breaks down, you know that, okay, sellers now are more active in this market. So we should be looking out for sales. We should be selling in this market. Okay, that is structure for you. That is structure for you. You want to be buying when the market is in an uptrend. You want to be selling when it's in a downtrend. And when it's ranging, you want to stay away from that market for that time. Then when it breaks out or breaks below, you know that, okay, you want to be buying and you want to be selling. All right. Now, this basic market structure comes with what? It comes with support and resistance. It comes with support and resistance. That is the basic market structure. That is likely the first thing you guys are going to learn when it comes to trading. Like when you guys just come into the trading community. You've heard about forex, you want to get into trading. The first thing they'll teach you is support, resistance. Am I right or am I right? They'll teach you about support, they'll teach you about resistance. Hardly will you see a trader coming new as a newbie into the market, and the first thing you'll be learning is this is soup of liquidity, smart money concept. No, hardly. That is hardly. You will learn about support, you learn about resistance, you learn about trend line. You get. So this is the first thing you want to learn. But what if I told you that this is a scam? What if I told you guys that this right here is a scam? your support resistance trend line is a scam. Really believe? Now I'm giving you guys secret though. Do you know that this is a scam? Trust me, it's a scam. Yeah, it is. So you need to know that first, because this is what the market makers use to trap us. If you are still trading support resistance, I'm not saying it's a bad thing. There are people that trade support and resistance that are still making good money. Okay, but the natural order of things in the markets is what liquidity must be swept before price continues to its direction, which we are going to look at in the basic market structure. So if you are trading support resistance trend line, you'll be wondering, why do I keep getting stopped out? Why do I keep getting stopped out? Because the market know what you want to do. They are waiting for you to do it. They are waiting for you to make that mistake. They're waiting for you to make that mistake. You get? They're waiting for you to, okay, market has broken structure, right? So this is my support. Let me wait for markets to come here to this support, test this support, then I will buy. They're waiting for you to make that decision. They wait for you to do this, then buy, right? Then all of a sudden, maybe it buys up to here. Then you see something like this. Price does this, and then price, boom. Then you'll be like, okay, the market stopped me out. Why? So much manipulation in the market. Bro, you were just bringing the liquidity because you were not able to spot the liquidity in the market. I don't want to teach about liquidity yet. I'll do that in advanced market structure. But now, we know that if market is moving like this, higher high, higher low, higher high, higher low, higher high, higher low, and we are buying at the breaks and this, don't you think it would be too simple? Don't you think we would all be rich? I mean, it's so simple now. Shebi, I'll just have to wait for market to break structure, give me higher high, then come back, retrace, let me enter here. It breaks again, it breaks structure, let me enter at this support. Break structure, let me. Wouldn't we all be rich? So why are we here? Why are we having this mentorship program if it's that simple? If market is this simple, if market moves like this, so simple, we would all be rich. So this is what they've used to blind us. But we don't go, express all kind of things for the market. We know say more all this one are just capping. Us they give us keeping. They whine us normally. The market is just whining us because you see all of this, it's all manipulation. It's all manipulation because they know how traders think. They know the psychology behind traders. So that's what they want to use against us. Markets can never move like this. Never, not in a lifetime. That's why you see markets give you this kind of structure. You see markets giving you this. Now look at this. This is a downtrend though, right? This is a downtrend. V10S. This is a downtrend. Price is creating new lows. New lows, right? Price is creating new lows. But you can see the downtrend is not clean. Like you are not seeing, okay, price does this, then tap here. This is support, right? Does this, then tap here. This is support. Does this, then tap here. This is support. No, price does not do this. Price does not do this. See, support. It failed. The support failed to hold. Look at this. Failed to hold. So all of this is just jargons. You get. If you don't eat TP, wait. Wait, the EU eat TP? Omo. Omo. Ah, mad, 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 mad. And you know what? On Euro USD, I also had a trade. I also did an analysis. Jesus Christ, it just triggered EU sell, and it's selling off already. I had this analysis on EU, and it's selling off already. I beg, I beg, I beg. I'm trying to trade a prop firm this week, so I'm studying the what do I call it, the currency pair. Usually I trade synthetic, so I'm studying currency pairs right now. So guys, like I told you guys, yeah, like I told you guys. See, look at this. Okay, someone said I should show them the EU. Now let me show you the EU trade. Sorry if I'm deviating a bit. Let me just show you guys. I'm gonna see what's on. Give me cash, we can like that. On top, if you like something, you never let me shop. I need you. All right, so this was the setup I had on EU. This was the setup I had. So simple. Like I don't need to. I didn't even do top down analysis. I just went to the for 5 minutes time frame. Hey, oh God, I have to share this screen again. Sorry guys. Sorry guys. Sorry guys. All right. So this was the trade I had on EU. Look at this. So I had this, right? Sweep of liquidity, structural liquidity. I'll teach you guys all of these things later, okay? Let's not rush it. Then I had this sell, right? I need that, okay, market is selling. And where is market heading to? Yeah, right? So look at what happened. Then I went to the lower time frame, 15 minutes time frame, to see if I can get another entry. Then what did I do? I simply marked this out. I simply marked this out. Sweep of liquidity. This was my I. This was my structural liquidity. There was my entry. My entry was there. You know, take me, I'm a take calm, my money, got my promoter desperate. Make another mind, my money, then my mind, do many I go, many people I read, oh my I read, I'm a see, no see, hello. Can you see? Easy peasy lemon squeezy. I totally forgot about this trade. I don't use limits, I use confirmation. Only confirmation entry. My confirmation entry is on the 5 minutes time frame. I'm going to teach you guys. Damn, it's tanking. my confirmation entry was on this supply level here, on this 5 minutes time frame. This was the supply level on the 5 minutes time frame. Those from the December batch would understand. You guys on from January batch, you guys will soon start to understand. You guys see your eye go so open. You know when they say eye don't open, like they don't cover an eye before it go open. Same thing I have on NZD card. Same thing I have now. This is live, so those people that are saying this person scam, you know, you're gonna learn, and you're gonna learn the hard way. I'm very dark about it. You're gonna learn. You're gonna learn the hard way. Man, this is good. Like you know, trading is actually sweet and fun when you know what you're doing. Now, when you don't know what they do, trading will be frustrating to you. I swear to God, trading will be frustrating to you as hell. Don't play. You're gonna learn. Don't play. You're gonna learn, and you're gonna learn the hard way. No, you guys will learn the hard way. Trust me, I'll teach you guys the easy way. Like the way I will teach you is so simple and straightforward. Like it won't be hard. Now let's go back to the board, please. Our time is running. Please, whoever you are writing on my screen, stop. Make me self reason. Don't worry, you guys will get there. It's just a matter of time. Let's finish this basic market structure. So now, what we want to focus on here, we want to focus on advanced market structure. That is what we want to focus on. See, forget about this basic market structure. Forget about this trend lines, this thing, support resistance. No. Let's scrap this out. Let's scrap this out. We don't need this in our life. We don't need this in our life. Let me show you what we need in our life. This right here is what we need in our life. See, trust me, if you can understand advanced market structure, your life will change for good. And I mean, they tell you, advanced market structure. Now, there's a rule that comes with advanced market structure, right? And what's the rule? There must always be what? A sweep of liquidity. Please, you guys know down this rule. Very, very important. Very important. There must always be what? A sweep of liquidity. See, that is how market moves. Market moves with liquidity. And what's liquidity? Liquidity is money that fuels the market. Without liquidity, markets will not move. So let me show you how the advanced market structure moves. Higher high, higher low, right? Higher high, sweep of liquidity, higher high, higher low, higher high, sweep of liquidity, higher high, higher low, right? Higher high, sweep of liquidity, higher high, higher. Price might even be doing all this nonsense. Price might be doing all this nonsense. Then what will you do? It will sweep liquidity. Then continue. Ladies and gentlemen, this is how market moves. Don't let anybody deceive you. This is how market moves. Because now, if you buy your GLE 450, right? You buy your Lamborghini Urus, you buy your Tesla, your Ferrari, your Porsche, your whatever vehicle you are buying. No, let's not use Tesla because that one na cheats. That one na electric they use. So, but the rest, they are using fuel now. At least something is fueling the vehicle to move. And without it, it will move. That's the source of its power. Either it's electric, either it's this thing, what they call it, solar, either it's fuel, diesel, whatever. Something must fuel that vehicle before it can move. Same thing as the market. Same thing as the market. Something must fuel the market before it moves to a particular direction. And what's that thing? That thing is called liquidity. Sweep of liquidity. That's what market does every day in the market. Market sweeps liquidity every day. All of this. And what's sweep of liquidity? It's simply taking out a previous low or a previous high. That's a sweep of liquidity for you. Market is just simply taking out a previous low or a previous high. Okay? Sweep of liquidity, you enter. Sweep of liquidity, you enter. You don't enter until you know that, okay, this market has swept liquidity. Then you want to enter. That is when you want to enter. Don't say you want to enter when the market has not swept liquidity. It will mess you up. It will mess you up. Please, can you guys see my screen? Hope you guys are seeing my screen. You guys are seeing what I'm drawing on my screen. This is how markets move. And this is what we want to implement on our chart every day. Okay? So now, rules that guides the advanced market structure. The steps to take in the advanced market structure. Write it down somewhere or I don't know. I'll send the video later, but please, we have like 7 minutes left. I want you guys to know the rules that abide with this thing, advanced market structure. The steps one needs to take in the advanced market structure before that advanced market structure is valid. What makes, let me even write it down. What makes an advanced market structure valid? Now, what makes an advanced market structure valid? Rule number 1. Yeah. 1. Please, you guys note down this rule. It's very, very important because this is where the trick is now. Once you can understand these rules, the steps to take, trust me, you have broken that chain. You have broken yoke first. Trust me, I swear. Rule number 1, there must what? There must be a sweep of liquidity. Rule number 1, there must be a sweep of liquidity, right? Rule number 2, now these are the things you want to check in your checklist, like your criteria. You want to check that, okay, price meets all of these criteria before I take a trade. Now, these are the things. There must be a sweep of liquidity, right? Rule number 2, price must, okay, no, let me say they must. No, we are not using that term. We are not using that term yet. That's in liquidity. There must be a break of structure to the opposite direction. Right? Rule number 3. We need to be faster. Rule number 3. There must be what? There must be a retracement that would create liquidity to be taken out later. Rule number 4, there must be what? There must be there must be another break of structure. Rule number 5. Price must come back to sweep the newly created liquidity. Now, guys, these are the rules. Please note them down. Now we are going to, practicalize it now. I don't want us to go on the charts yet, okay? Okay, now, okay, you know what? Let's go on the charts. Someone say we should use the charts. Now, let's look at this. I need a clean chart. Hey. Oh, which chart should I use? Let's use this chart. Okay. No, don't worry, let's use the NZD card because this is the trade I'm planning to take. And I want to show you guys the reasons I'm taking this trade. Now, guys, have you guys noted down this stuff that I wrote? The rules. Have you guys noted down the rules? Please, I need to be sure. Have you guys noted down the rules? Yes, okay, good. Now, rule number 1 is what? Please, as I'm asking for rule number 1, write it down in the chat box. Rule number 1 is what? Sweep of liquidity, good. Sweep of liquidity. So now, where's our sweep of liquidity? We have a sweep of liquidity here. Rule number 2 is what? Rule number 2, please, rule number 2. Break of structure, right? Break of structure to the opposite. Now, this was where the sweep of liquidity happened, right? Now, where will our break of structure be? The opposite direction where the sweep of liquidity happened. So we have this break of structure here. Yeah. Or let's use here. This was the immediate break of structure. Rule number 3 is what? Rule number three, guys. Rule number 3. Retracement to create liquidity. Now, where's the retracement? After this break of structure, we had this pullback, this retracement here. Right? And this retracement gave us what? A liquidity. Now, rule number 4. What is rule number 4? Second break of structure. Where's the second break of structure? After price retraced, it gave us what? This second break of structure here. Now, what is rule number 5? Rule number 5, guys. What must price do? Price comes back to sweep liquidity. Thank you. Price must retrace. Thank you. So what's that? Price will come back and sweep out that newly created liquidity, which was this. Right? Right. So this is where you have your entry. This is where you have your entry, guys. Easy peasy. If you can follow these rules, you are good. Our time is up. Okay. So what I'm going to do, I'm going to just do a couple this thing on Telegram, a couple of screen share on Telegram to just do 1 or 2 analysis more. Okay. Let me do that now.